The FCA has announced the most significant changes to the Stocks and Shares ISA account in the last 2 decades, and it completely changes how investors actually access the cryptocurrency market. For the first time, crypto exchange traded notes, or ETNs for short, can now be bought within a Stocks and Shares ISA account, giving retail investors a new way to tax efficiently invest in digital assets like Bitcoin and Ethereum. However, it may all be short-lived, so today I wanted to explain exactly how ETNs work, what they are, the risks, opportunities, and the new rules being proposed for the next tax year. I've also partnered up with Duncan Moyer, who's the president at 21 Shares. They're a crypto ETN provider and they're experts in the space, and they're going to help me share all of the important information with you. Okay, so a bit of background. Over the last 5 years, the FCA have actually changed their stance on crypto ETNs, and they've actually lifted the previous ban that was in place for retail investors from 2021. With the ban now being fully lifted, so retail investors can access these ETNs as at the 8th of October 2025, with the executive director of the FCA stating, "Since we restricted retail access to crypto ETNs, the market has evolved, and products have become more mainstream and better understood. In light of this, we're providing consumers with more choice." That's after a 2024 FCA research paper found that 7 million adults in the UK own crypto assets, with about 93% of adults having an awareness of cryptocurrency. Now, I do agree that cryptocurrency is becoming much more mainstream, which has certainly helped with awareness, but I don't completely agree that cryptocurrency and the products associated with it are completely understood by the masses. So let's get into that in this video so everybody's brought up to speed by starting off with, what is an ETN? A crypto exchange traded note is an index tracking product linked to a cryptocurrency like Bitcoin or Ethereum. Meaning from a market tracking perspective, they work similarly to products that you might be more familiar with, such as an exchange traded fund, which actively track the price of a market like the S&P 500, for example. Now, like ETFs, ETNs are also subject to FCA regulation and are listed on the London Stock Exchange. But there are a couple of different rules that ETN issuers must abide by in order to keep your money and your assets safe. But to help me explain this, I now want to introduce you guys to Duncan Moyer, who's the president of 21 Shares, to help share some of this information with you. But first, I need to share with you this risk warning. Crypto is a high-risk investment and may result in the total loss of the capital invested. Please inform yourself in advance about the risks. For more information on these risks, please visit the 21 Shares website. So first question then, can you explain whether ETNs listed on the London Stock Exchange are physically backed, meaning do they hold the real cryptocurrency, or are they synthetic, meaning they just replicate the performance without holding the asset itself?
Absolutely. Every ETN on the London Stock Exchange has to be physically backed, which means if somebody buys £1 worth of a Bitcoin ETN on the LSE, £1 worth of Bitcoin is then bought and held in custody.
Okay, so then when it comes to these crypto ETNs, who's then actually holding the real Bitcoin or Ethereum behind the scenes? And I guess how is that kept safe?
Sure. So in this case, regulated, authorized custodians are used to hold the actual Bitcoin. They're not held by the issuers themselves, and they keep them in cold storage with a range of different security measures to ensure safety.
So then if the ETN issuer fails, and let's say that I had £1,000 invested in, say, like a Bitcoin ETN with the issuer, what would then happen to my £1,000 investment?
Great question. So what's important is that the issuer is bankruptcy remote, which means that the liabilities of the issuer are separate from the company that you see the brand name on that ETN. And in the event of bankruptcy, a trustee takes over and liquidates the positions and delivers the investments back to the investor.
From a retail investor perspective, I think all of this is important context around the safety of your crypto assets. And what I think is particularly important is when you go away and do your own research, that you ensure that any ETN that you may look to invest in is one-to-one backed and has all of the same protections that Duncan has just explained. And you should be able to find all of these details out in the ETN's prospectus. Now, whilst crypto ETNs are a convenient way to buy crypto assets, it's important to remember that these products do still carry their own risks. So now let's take a look at what investors should be aware of. Okay, so Duncan, what would be the benefits to holding a crypto ETN compared to owning crypto directly via an exchange?
Sure. So besides the fact that it's going to be easier for you to manage in your broader portfolio if you hold the ETN, and most likely cheaper because these platforms tend to be pretty expensive, the actual custody of that is going to be very, very different. On a crypto platform, people will often keep their crypto on the exchange. Think FTX. With the ETN, they're with the custodian and separate from the issuer.
And then finally, Duncan, in your expert opinion, what is the current investment case for Bitcoin? And what would you say are like the 2 or 3 potential key factors that investors should consider when evaluating its long-term potential?
Okay. There are probably 3 different ways I would think about investing in Bitcoin. The first, my own personal view, is this is investing in technology. This is a payments and store of value that are all built on new rails, new technology that will drive future innovation. The second is around the fact that Bitcoin has a finite supply, and we have more and more institutions, governments, corporates buying Bitcoin, creating upward price demand. And the third and final is, even if you don't believe in all that, at the end of the day, from an asset allocation perspective, you have an asset in a portfolio that could provide diversification and increased risk-adjusted return. One thing to think about as you're allocating to the space is how much should you own? And I would consider reassessing that over time as the volatility of Bitcoin and other cryptocurrencies comes down.
So I hope you found that short segment from 21 Shares extremely useful. And if you want to find out more information in terms of market insights and additional educational material, well, I'll leave a link down to 21 Shares in the description below. And thanks again to 21 Shares for sponsoring today's video. Next up, I want to touch upon how crypto is taxed. I guess one of the biggest benefits to the Stocks and Shares ISA account is how it's actually taxable from the UK government, in that there are no capital gains or dividend tax to pay. This means that just like your shares, cryptocurrency can also be bought within your Stocks and Shares ISA account without having to pay any tax on any gains that you go on to make. These rules obviously differ for those who have purchased digital assets historically on a more traditional cryptocurrency exchange, because upon the sale of those assets, if there's been a gain that's made, they may be subject to capital gains tax. Now, as the government have said, and I quote, remains supportive of the UK's growing crypto asset sector and continues to develop a comprehensive regulatory framework that fosters innovation whilst protecting consumers. Now let's touch a little bit more on Bitcoin as one of crypto's most popular assets, and we'll touch a little bit more on its characteristics. I think it's important to note that Bitcoin and other cryptocurrency assets can be extremely volatile. Just within a few weeks, Bitcoin crashed 12.5% in a single day after Trump imposed the new set of tariffs on China, a record liquidation of about $5 billion. The price declined from about $122,600 per coin to lows of about $107,000 per coin, before falling slightly further in the aftermath, bottoming out at close to $100,000 per coin, with it now trading at just under $93,000 a coin, just showing how volatile of an asset it can be. And all this has taken place within the space of about 6 weeks. Now, to benchmark this against the broader stock market for additional context on volatility, based on some research done by Hartford Funds, the only time that the stock market has had a worse single day drop than what we saw with Bitcoin in the last few weeks in percentage terms was back on Black Monday in 1987, where the market declined just over 20%. Not even the pandemic crash or the financial crisis of 07-08 saw a bigger single day drop in market prices than what we saw with Bitcoin just in the past month or so, which I think is important to discuss when we talk about portfolio allocation, which we're going to touch upon a little bit more in just a moment. Now, on the topic of risk and volatility, because cryptocurrency is seen as a complex instrument that carries a high degree of risk, there are a couple of additional pieces of criteria that are being set out by the FCA. First, investors must declare that they will invest no more than 10% of their assets in high-risk investments, alongside passing a short test to demonstrate that they understand crypto ETNs and the risks involved. I know it feels a little bit like going back to school, but it is a requirement from the FCA to essentially ensure that investors who are buying into these kinds of products absolutely understand them. And in my opinion, I think that's pretty fair game. You'll be prompted to complete this questionnaire within the Stocks and Shares ISA account that you're using if your provider obviously offers crypto ETNs. On the whole, I do think this is a positive move from the FCA in allowing these crypto ETNs into retail investors' investment portfolios. But in terms of how I build out my own asset allocation towards Bitcoin, well, I wanted to share a little bit more of a thought process on that. The data, of course, shows that Bitcoin has been the top performing asset over the last decade, with a compounded annual growth rate of, get this, 102.4%. This is a monumental growth rate which far exceeds any broad market tracking index funds like the S&P 500, for example, which is closer to about 11% per year. I do think it's worthwhile me saying, though, that whilst I obviously don't know what's going to happen with the price of Bitcoin in the future, I would say it's highly unlikely, if not borderline impossible, that we'll see the same kind of compounded annual growth rate over the next decade, because that would put the price of Bitcoin at $2.1 billion per coin. And if Bitcoin was $2.1 billion per coin, that would put its market value bigger than the GDP of the entire world. So yeah, it's probably not likely unless central banks just print money at an absolute astounding rate. But putting most recent growth in Bitcoin's price to one side, I do think one of the largest pulls for retail investors will be because of that historical price performance that they've clearly seen within the charts. However, and this is just a personal opinion, on the basis that it's very much still a non-productive asset and it's still very much speculative in terms of what it's actually going to be used for, in my opinion anyway, I would only ever allocate a very, very small percentage of my overall portfolio to this type of asset class. And here's why. A report from BlackRock shows the risk contribution to a portfolio based on the percentage allocation that you have to Bitcoin within it, benchmarked against a 60-40 stock bond portfolio, and it shows a 1% allocation contributes to 2% share of portfolio risk, while scaling that to just a 4% allocation, it contributes to 14% share of portfolio risk, compared to that of an average Mag 7 stock, which contributes to just 4% to portfolio risk, and that's on stocks that are inherently more volatile than your market average. But that's just one thing to consider, and I do want to stress that it is a highly volatile, high-risk asset. And as a personal choice, I would only ever look to have a few percent of my portfolio held in this type of asset, at least for now anyway. But they're not the only things you need to be aware of, because all of this may just be short-lived. There's one thing that I don't think is going to be too popular with retail investors, in that it currently states under the policy statement on the government's website that crypto ETNs will automatically be eligible for inclusion in the stocks and shares ISA, but from the 6th of April 2026, they will be reclassified as qualifying investments within the Innovative Finance ISA. So my current understanding of this is that from the next tax year, you will need to have an Innovative Finance ISA to tax efficiently invest in cryptocurrency. Some stocks ISA providers may start to bring out Innovative Finance ISAs in order to be able to capture that market of retail investors that want to invest in cryptocurrency. Or alternatively, the government might scrap that whole idea altogether and just keep it within stock ISAs on the whole, which I think would be far more simpler. I think it would be good to get some clarity on this sooner rather than later, because the last thing that I would want is that you would have to then sell your crypto ETN within your stocks ISA and then have to rebuy it within the Innovative Finance ISA. If I'm honest, I don't even know why we've really been allowed to invest in crypto ETNs within the stocks ISA for the period of like another 5 months, when they're potentially just going to take it away from us and force us over on into new accounts, which just adds additional complexity into buying these kind of new innovative type of products. So that's the latest on all things cryptocurrency within ISA accounts. If you do have any questions, be sure to leave them down in the comment section below. Be sure to subscribe to the channel whilst you're over here, and YouTube thinks that you might also be interested in this video next. So be sure to click on that now. With that being said, see you over in the next one.